Ladies and gentlemen, mortgage delinquencies are on the rise in the country. I mean, let's face it, America is in a very weakened state now. This is not the same country that it was even a year ago, and it's not going to get better. Look, people have been evicted. I was looking at some of the stories online of children with their parents are now thrown out into the streets. Some of these people got COVID that were evicted. And they're like, well, who's going to take me in? They can't go to their family or friends because they're going to infect people. So folks are on the streets with coronavirus and they have nowhere to go. And now America may be looking at record breaking foreclosures all across this country. Because if a person is not working, they can't pay a mortgage. So this came out on Reuters August 17th, 2020, as U.S. home builder confidence matches record high, mortgage delinquencies rise. U.S. home builder confidence rose for the third straight month in August to match its highest level ever as record low interest rates spur buyer traffic. Data released on Monday showed in the latest indication the housing market is a rare bright spot in the economic crisis triggered by the coronavirus pandemic. At the same time, however, a growing number of homeowners are falling behind on their mortgages, with tens of millions still out of work and growing signs that the labor market recovery is softening. The National Association of Home Builders Wells Fargo Housing Market Index rose 6 points to 78, matching a series record set in 1998. The median expectation among 30 economists in a Reuters poll was for a rise to 73 from July's reading of 72. Housing has clearly been a bright spot during the pandemic, and the sharpest rebound in builder confidence over the summer has led NHHB to upgrade its forecasts for single family starts, which are now projected to show only a slight decline for 2020. Single family construction is benefiting from low interest rates and a noticeable suburban shift in housing demands in the suburbs, exurbs, and rural markets as renters and buyers seek out more affordable, lower density markets. The delinquency rate for residential mortgages rose 8.2% in the second quarter, nearly up 4 percentage points from the first quarter, and the largest quarterly increase on record, according to the Mortgage Banker Associations. Loans backed by the Federal Housing Administration, a program used by many first time buyers and those with lower incomes, saw their delinquency rate jump to almost 16%, the highest since the survey began more than 4 decades ago. The figures reflect the struggles faced by millions of homeowners during the crisis, including many participating in the forbearance program that allows people facing financial struggles because of the pandemic to put off their mortgage payments for up to 1 year. An estimated 4.2 million homeowners had loans in forbearance as of the end of June, according to the Mortgage Bankers Association. The forbearance program, combined with rising home values and other loan modification options, can offer relief to struggling homeowners, said Marina Welsh, vice president of the industry analysis for MBA. So, wow, this is going to be another big problem, y'all. Because, they said many of the people that are unemployed now may be unemployed for years. So if you are unemployed for a long period of time because jobs are scarce out here, when that year comes, you're going to be in trouble. You're going to be in trouble. If, if most of the people are not back working within the year that your mortgage is in forbearance, I mean, this is really a bad situation when you look at this whole thing. The flood of new delinquencies is dropping off, Walsh said, adding that mortgage delinquency rates tend to rise when the unemployment rate increases and vice versa. The U.S. Census Bureau will report July's housing start data on Tuesday, and economists polled by Reuters are looking for an increase to 1.24 million units on an annualized basis from 1.186 million in June. Housing starts plunge this spring during widespread lockdown orders issued to try to contain the virus, but have rebounded sharply from a 6-year low hit in April. The economy fell into recession on February as a result of the COVID-19 pandemic. Okay. A separate report from the New York Federal Reserve Bank on Monday showed the pace of growth in manufacturing activity slowing much more than expected in August from a 14-month high in July. The New York Fed Empire State Manufacturing Survey dropped to 3.7 from 17.2. Economists polled by Reuters had expected a reading of 15, with a reading above zero indicating expansion. All right, so ladies and gentlemen, I think eventually the evictions and the people with mortgages where the delinquency is rising is going to be a huge problem when 2021 gets here. It's already a problem now, so you can imagine how astronomical it is. And all you got in Washington are politicians playing with everybody's lives. You have really very much overprivileged people there that are deciding for everybody else. And as you can see, they don't give a damn. They all went home on recess and left everybody high and dry. I read an article today that the first $300 weekly benefit may not show up for most people until the 29th of August. That's when you may see the first signs of it. And that's going to depend on what state you're in. Y'all tell me what you think. Please leave your comment and subscribe. Don't forget to hit on the notification bell, and I'll see you on the next video. Peace, family.